Good morning. Today is the 15th day in the month of July 2022. My name is Heritage Adisa, market analyst at HFM Nigeria. And as always, we check through the markets, find out what the overall sentiment is, the right opportunities, and then how we can take advantage of it. But please remember that this is just a communication material. Nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning as another mixed, another lackluster performance, another mixed environment. It's really been a disjointed week all through the week, right? Roller coaster here and there, where we had upside, downsides, choppy moves. Even though the overall theme, has remained unchanged. I had this written down earlier. I said rounding up a roller coaster week, right? Equities took a breather yesterday evening. Now we said yesterday towards the downside after US CPI data that came out around 9.1%. That's the highest in about 40 years. Data on Wednesday. So markets are pricing in 100%, 100 basis points increase in interest rate by the Federal Reserve in their meeting in about 2 weeks. Now, that supports some upside for the US dollars, downside for equities as well, heading into the start of yesterday. Now, that happened for a bit, but not long after we had federal speakers, these are hawks, non-hawks, Fed Waller as well as Bullard, also come out on the wires and support the 75 basis point hike, basically pushing back on that market expectation for 100 basis point increase in interest rate. And that, saw equities pay back some of the losses. So they were down earlier in the day. Later on, they pulled up again as well. And ended the day mostly flat. Now, so far today, that overall general flat, movement is still very evident in equities. I'll get to that in a moment. Now, apart from that, we still have the overall negative cloud in markets. There's been a couple of new developments. First we had data from China. Growth data, GDP growth data, which was weak as well, and clearly one of the biggest drivers of the global economy, second to the US, having weaker growth prospects like that clearly affects the rest of the world, particularly Australian economy, New Zealand economy, and by extension, the rest of the world. So there was that. We also have some political tension as well in Italy, adding to the worries of the euro right now. In this case, the PM as well tried to resign, but then the president also rejected a resignation. In the case of losing support of one of their major supporters in the coalition government, right? So there's that as well, also not adding to the positive for markets. But apart from that, we have the general global growth, slowdown, recession expectations, all amidst central bank tightening in the middle of high inflation. All of this to remain, the major culprits, right, for the overall negative flow that we're seeing. Now, you look at bond yields, for example, clearly showing that, negative flow, bond yields are red across board. You look at commodities, generally also in red across board, also showing that, negative flow. But equity futures are mostly flat. A lot of them are trading in mixed as well. So that puts a bit of, how about we're more cautious with the environment that we're seeing so far. And then you look at FX as well. FX also trades mixed. Now, in the currency space, NZD-CHF leads the majors. The euro is not far behind. Now, considering the worries that we have with the euro, considering the downside in commodities that we have, and then NZD leading the majors, euro being amongst the strongest, it just doesn't balance out. And that's why, it's more of a disjointed flow that we're seeing in the market. And on the weaker side, USD and JPY sit at the bottom. The GBP is also not far behind them. But one thing is very key, the moves in FX are very marginal. This strengths and weaknesses are changing like every other second, and that means we should be very, very watchful going into today's trading session. It doesn't carry a lot of conviction, and especially the fact that we're heading into a weekend. Today is Friday already. Position squaring is always going to be a risk, profit taking is always going to be a risk, and all of that really plays a big role in the market as well. Now, having said that, you look at the biggest movers, not a lot of net change. Not a lot of net change. NZD versus USD, for example, is basically flat. NZD JPY is still struggling around the key 85.00 level. You look at Euro USD, struggling around that parity level, staying above it every time it's gone to the parity level, broken below it just a bit, it's jumped back above it in a moment, and then we're still above parity. So that still holds, but the net change is about 0.19%, right? So clearly that's not even much. Now, for the day ahead, it's a Friday. The calendar is not all that light, but focus will remain on the US dollar clearly. And then the main thing here is market's expectation for, the pace of the Federal Reserve tightening, FOMC tightening of monetary policies. Now, overall, there's 100%, almost 100% expectations by markets for a 75 basis point hike. But the question will now be, will it be 75 or 100 basis point hike? And that's why we'd like to listen to Fed Bostic as well as Bullard when they're on the wires later today as well, to also get their insight into what they expect the next, hike size should be. We also have retail sales for the US and also University of Michigan's consumer sentiment also scheduled as well. Now, this would also help us to see what the current state of the economy is right now and then where we are. But generally, that overall strength in the USD hasn't really changed because the outlook for the Federal Reserve is still to tighten and tighten, especially with inflation even getting worse or as it's worse in the last print. It means that the Federal Reserve will continue to hike, at least in the meantime, which remains a positive for the dollar and all the, gloom and doom expected for the global economy in line with energy crisis, COVID cases in China, all of that, still weighs on the global economy, and that is still a supportive factor for the dollar. So there is that to pay attention to in the day ahead, and it's one that remains in focus. Now, quickly running across board, this is the dollar index, basically not going anywhere so far today, flat as well in today's session, which clearly gives us, an idea of where we are trading right now. And then it's likely that we have that slow, back and forth messy action just to wrap up the week. And then maybe next week we'll get something more interesting, especially when we head into that blackout period for the Federal Reserve before their meeting. So there's that to look out for. Apart from that, you look at the equity space, for example. So far today, this is US 500, basically not going anywhere, struggling around this key 3,800 level. Also very clear, sign as to where sentiment currently is trading right now. And it's basically the same thing across the other US futures, right? Oil prices, for example, also still there meandering. Yesterday we had strong downside. Today we have upside. Now there's also talk that President Biden is also heading to Saudi Arabia to see if he can get them to increase production, right? But yes, that could be a good thing, at least to help push oil prices lower, help increase production, increase supply. But there's not even so much room for those oil producing nations to also increase their bottom line, right? Increase their oil output. So there's that, but we need to just pay attention to that as well. Copper continues to make fresh lows as well over the last couple of sessions. Right, we just kept breaking through key areas of support. We tested pushing lower, broke through this one as well. We tested pushing lower. Now we've broken through yesterday's lows. I think the downside, the pressure on the commodities in line with the risk of environment continues, and copper is very good evidence, a player in that one. Now for FX generally, the moves are not really encouraging so far. NZD USD, you want to look at strength and weakness, basically hasn't gone anywhere so far today. You want to look at NZD JPY. In line, let's look at the one, let's say USD CHF, I think is also in line as well. Just a messy one, really. If you cross over to the other side, look at NZD JPY, messy as well in today's session, not much going on there. There's one more that we mentioned, just to look at it. NZD USD, Euro USD, good. Euro USD as well. And that one to also look out for is it Euro USD. I think I had it opened. All right. Now, this is the price level that we're talking about, right? 1.0. Now, it broke below it yesterday, and then not just long, it broke back above it. So there's that. And every time we've come to that level, we've really just bounced off this level, right? As long as we still hold above parity, well, if we can clear out parity to the downside and keep pushing lower, then the next area of support, like I mentioned or highlighted, was yesterday, is way lower, right? Heading towards, I think, 0.96. So that's quite, some room. But it's Friday. We've had strong downside for the last couple of sessions. It's just a messy one. Last couple of days, going through the month of July, really, all through July, the whole half of July, right? But so far today, not much. We're basically flat as well. So on days like this, in sessions like this, it's best to just be more patient, wait out for something more concrete before looking to jump in, on any new positions. Now, running over to the calendar, like I said, this Friday. Yes, we have University of Michigan's consumer sentiment also expected. Now, lower numbers are expected, which also shows how much, market participants, consumers generally are, feeling about the economy. 49.9 is contractionary, territory. We're also expecting retail sales, even though the numbers are expected to come in better, but we'll have to see if that is also the case. And then we have a couple of Fed speakers, like I mentioned earlier, back on the wire. So we'll leave that at points right now. Thank you very much. If you have any questions, please do not hesitate to ask as always, and we'll do our best to help. Thank you. To enjoy the rest of your trading session. Bye for now.